Welcome to Ty's Daily Market Update. I'm Ty Wong reporting from New York, and it is Friday, July 17th. President Trump hasn't really posted anything important for the market, so I want to take a quick look at his speech that he made in prime time last night at 9 o'clock. And it was really about U.S. elections. So Axios reports 4 takeaways. He said basically his 25-minute speech, which is pretty short for Trump, was really talking about elections. He wants to build support for his Save America Act, which will require proof of citizenship for voter registration, and is stalled in the U.S. Senate because of the filibuster. Now, it makes a lot of sense that you need to show ID to vote. You need to show ID to buy alcohol, but the Democrats have always pushed against this. And the Democrats are holding it up with the filibuster in the Senate. And he talked, and he'll continue to talk more about the 2020 election. And he said that China, got a lot of information on the elections, but there's no on names and different things, but no real details on that. He talked about unauthorized immigrants on voting rolls. Probably some truth to it, but it's unclear how many there are. Vulnerabilities in voting systems, again, concerns, but no real evidence. So, just what's going to happen? The Senate Republicans are not going to kill the filibuster for this because, first of all, I don't think they have the votes for it. There's some Republicans who don't want to kill it, even though the Democrats, could kill it as soon as they come in. Plus, if the Republicans did do that, the Democrats could reverse it next time they hold the presidency and the House and Senate. So I don't think it's going to happen. It's interesting. The most interesting thing, he's singling out China. And I don't know if this is a signal of how he's going to treat China in the next few weeks or months. Remember, he had that summit. Xi is coming in September. Not really sure. And then I don't think the voters really even want to hear about 2020 election anymore. So just a quick look at what Trump was talking about last night. A surprise breakthrough from Chinese AI startup Moonshot, according to Bloomberg, rippled through global markets on Friday, sending AI and semiconductor stocks sharply lower. People are thinking this could be the DeepSeek moment, which was sort of April, I think it was February or April 2025, when DeepSeek came out and said, you know what, we didn't spend much money on this, and it's actually pretty good. And the market sold off aggressively before eventually recovering and making, fresh new highs. But apparently Moonshot, which is this AI company, its new Kimi K3 model, company said rivals the strongest offerings from OpenAI and Anthropic, and people are calling it now, this is the Kimi moment instead of the DeepSeek moment. An analyst saying people are worried that if U.S. companies start using Chinese models more and Anthropic less, then Anthropic will invest less. And that means those U.S. firms will lower the capital expenditure, and in the end, chip demand will be affected. And, that whole web around NVIDIA and different chips, if something goes even slightly wrong there, you could get a really, really big sell-off. So the Asian Semiconductor Index fell more than 6%, led by Kioxia Holdings. Moonshot's rival tumbled 28% in Hong Kong for the biggest decline since they listed in January. SoftBank, viewed as a proxy for OpenAI because they hold so many shares, dropped 9%. So people differently, even the internal other Chinese names were, sold off aggressively because this is, because this was such a surprise. Now, some people said it would, don't call it a DeepSeek 2.0 moment. Its development didn't come out of the blue, but it confirms that China is firmly in the AI race with the US, particularly when you take into account costs. So Bloomberg also, and now this is an opinion piece, but I think it's pretty good, by Catherine Thorbecke. And she said this is, Xi Jinping for the first time kicked off China's AI flagship summit. And his vision is, that Peking is not content with just being a player in this next industrial revolution. It wants to lead it. And it's interesting the tack that he's taking. He said he wants AI to be inclusive, extended open arms to the global south, so the poorer countries, eager not to be left behind because they simply can't afford Anthropic and OpenAI and some of those models. But China is saying, you know what, we want to keep it open development. We encourage open source, openness, and collaboration. And that is my comment on it. Yes, we'll do that until we have you on our models, and you're not going to go anywhere else. And then we'll raise prices. Now, this moonshot Kimi 3 is supposed to be the early benchmarks, early tests is just as good as some of the top of the line offerings from Silicon Valley. And just remember a few weeks ago that the Little Dragon Zhifu, Mark Andreessen called their release the first Chinese model to match and often beat US rivals with no compromises. So what is problematic for China is if you've got this technology that presumably costs a lot, although not as much as the Americans because perhaps you've stolen a lot of it. If you're going to be a race to the bottom, I'm going to be cheaper than you, it's open source. How do you keep advancing those without the investment necessary? So that's still a big question mark. Now Xi says AI is the next general purpose technology. He equated to the steam engine, electricity, and even if the Americans did the breakthrough, if he can control this in scale, China is going to do very well. So the thing that I think about is this in terms of AI, Xi wants China to be the Android and US tries to be Apple. US has their own niche, the high-end expensive stuff, but they, and most of the world uses Android because it's so much cheaper. So China, low-cost provider, that's their playbook. Okay, so this is from a couple days ago, but I think it's worth talking about. South Korean regulator on Thursday unveiled curbs on high-risk ETFs. They suspended new listings of leveraged ETFs, banned security firms and asset managers from advertising and marketing, and most importantly, tripled the minimum cash deposit for new investments to 30 million won. That's basically essentially raising the margin requirement like 3 times. That'll keep some of the people out, and that's what they want to do. And, the reason they're doing it, Zero Hedge said Goldman reported that as of July 13th, over 1.2 million leveraged retail accounts across the Korean market triggered margin calls. So 320,000 to 360,000 accounts fully liquidated by brokers. As a percentage of the adult population of 35 million, almost 1 in 30, almost 3.5% adults got margin calls. That is an unbelievably high number. So that's one of the reasons why I think maybe the South Korean regulator says, we've got to stop, put a stop to this. Now, remember, holiday in Korea on Friday, the Kospi, Samsung, and SK were all down sharply on Thursday. How much leverage has come out? Monday will be a really interesting session. That should tell us a lot. So where are we today? Energy is climbing into the weekend. It was relatively quiet in the morning, but they're buying into the weekend because apparently the U.S. has told Israel, we're bringing in a lot of refueling planes so we can hit certain targets in Iran. So market's getting nervous about that into the weekend. If nothing happens, you could see a little bit of a sell-off on Monday. Com services is leading the U.S. index lower, although U.S. index opened down 1%. It's clawed some of its way back. But overall, the market's in a little bit of a bad mood, the Kimi moment. But what's interesting is SK Hynix is higher, 5% higher. So maybe we've seen the worst in the Kospi if most of the leverage is actually out the weekends. Yields are a little bit lower, metals are mixed, crypto is okay. So you can see here, everything is lower except energy. Energy is the only thing, and comm services with Google, as we'll see in a second, Facebook and Netflix all lower. They're trying to fight back today. Let's see how it closes. Now, Google Gemini, according to Bloomberg, Gemini launched delayed as tech falls short of internal goals. They're months behind in delivering Gemini 3.5 Pro, its most powerful AI model. Now, basically, there's a lot of infighting in Google. Google has so many businesses that it's hard to get everybody going in the same direction. So engineers, researchers, and managers are frustrated, and they risk losing ground to Anthropic and OpenAI. And the problem with them is they're trying to get AI to work across a portfolio that includes search and maps and YouTube, and they all cause delays. So late last month, they tested the model and the results were disappointing. Supposed to be released in May. We don't know when they're going, when they're going in. And remember, Google is supposed to be a gateway because so many people use Google already. They want to have Gemini as, more convenient than going separately to OpenAI or Claude. Now, problem though is with so many different people wanting different things, they call it boiling an ocean, trying to get everybody in the same direction. Other favorite terms is boiling the ocean, herding cats. One of my favorites, a goat rodeo. So basically Google is, slow in their new release. So let's look at their chart. Remember, people were really worried about Google, and then Gemini came out, in September last year, and it was really good. And you see this gap higher, and then it just drove higher all the way through basically till the end of January here, when it retraced a little bit. And after the news came out, down 4.5% yesterday, down 2.5% today. So you might see Google go sideways, maybe retrace even more if Gemini continues to be delayed. Of course, we have to look at oil. Nervous late buying into the weekend, as I mentioned before. Let's see what happens on Monday, but you can see the new highs here. Gasoline and heating oil dipped yesterday, back up higher today, and we're right at $4 in the fuel at the pump, and this will start to matter again. So I want to talk a little bit about IBM. IBM got walloped 25% yesterday. So let's take a look why. Well, IBM, ahead of earnings next week, said, an early letter saying, you know what, our second quarter has been bad. And the board, decided to tell everybody, take their medicine, and be able to, say, you know what, we're being transparent. There is bad news coming. This quarter we faltered, what the CEO said, and the stock dropped 25% after the details came out. What they're basically saying, there's been so much money going into AI infrastructure like memory chips and cybersecurity that it's displacing hardware buying. Hardware buying is now, discretionary spending. Essentially, some people say, you know what, we'll hold off on this for a couple of quarters. We don't need to upgrade to the new mainframe right now. So, their sales were down, and the market really punished them pretty hard. So AI costs eating everything else. Let's take a look at IBM's chart. Look at it. It's a gigantic gap. But if you take a step back, you can see where we are back where we started before in October. It's not October. In May, Trump said the government is giving $1 billion to IBM for quantum computing. They're also giving another $1 billion to 9 different companies, quantum computing, and taking some equity stakes. And you can see how much this spiked higher. So we basically come all the way back down to where we were. So really painful. Is it so much of a disaster? Well, let's look at the weekly chart in IBM. It's a bad patch, but otherwise IBM has been trading sideways over the past few months, an upward sloping trajectory. We'll have to see how this all resolves. The PE is in the high teens. It's lower than the S&P 500. I don't know if you can buy it yet, but if we get a significantly deeper correction, another 10 or 15%, you might want to think about it. So it's one we'll keep an eye on. Netflix, one of the famous FANGs, I called it, it's D-FANG now, the N in what used to be called FANG. Their second quarter earnings just beat 80 cents versus 79 cents, but the revenue was below what analysts were expecting, and the guidance was lower than what market was expecting for the third quarter. They're looking for 82 cents on 12.86 billion, below Wall Street estimates. You don't really want to do that. If you just beat or if you miss, you're going to get hurt. And the issue is Netflix is facing competition from other media companies and social media sites like TikTok and YouTube, but just taking eyeballs away. The other thing that made people upset was they have this What We Watched report that they publish semi-annually, and it shows what their clients are watching. They're reducing that to, only once a year. And, given that they sort of missed and are giving lower guidance, as engagement faces more scrutiny, the company is reducing the frequency of this really important report that the market likes. And just the market doesn't like that act. Netflix, been a rough year. You had this pop here, but then most of the year was down. PE is around 20. It's not expensive, but not that attractive. And then on a weekly basis, have we seen the best days in this spike here? Eventually, I think, it's one of the FANGs. It's not, it's not the mags, it's not bananas anymore. Eventually, you might see this come back from rotation, but we need a consolidation. I haven't seen it yet. Just a quick look on data releases. There's housing starts jumped, sharply higher, but it's multifamily. And multifamily doesn't move the needle as much for the economy as single family homes. Industrial production and capacity utilization are both soft. Michigan came out pretty strong, but the survey came back in before the resumption of U.S.-Iran hostilities. So you have to take that with a grain of salt. Thanks for joining me next week. It'll be an interesting and important week next week. I'll see you then.